Welcome back to Investing and Trading Live, sponsored by Online Trading Academy. My name is Josh Lilquist, and we are having a great old time. It's a winter wonderland this week, talking about the financial markets. A blizzard of a week, not Blizzard the stock. Was it Activar Blizzard? It's a blizzard here in all across the country. Some great weather, but we had some great moves in the stock market. And we had a lot of people texting in for this free investing class here at Online Trading Academy to learn how the markets work, some opportunities, and to see how the market works up, how it works down, and different income strategies with that. If you missed it, you can just text the word investing to the number 210 for 2 seats. That's text investing to the number 210 for 2 seats for an investing class. In that class, we're going to talk about how the markets work, different income strategies, retirement strategies, but also the conditioning on how the public thinks the market works, how the institutions actually move the market, and how us as traders, investors, how can we trade like them? Because we want to trade like the institutions, not against them. And as I mentioned in that last segment, we're going to do a little bit of stock analysis here. This week we had a couple of people text in about some different stocks, and I want to talk about Lowe's this week. And it was actually one of our OTA picks here. And this is a trade that's already happened. And it was an opportunity for our students. And these are opportunities that you can take. These are opportunities that you cannot take. It's totally up to you. You can make your own decision on that and do your own risk management on there. But what it does, it actually gives you an idea as far as where demand might be, which is where we want to be a buyer, or potential supply is where we would want to be a seller. And in this particular stock, Al, it's Lowe's. It was a long position. Just real quick, explain what a long position means.
Well, with a long position, you're looking or hoping that what you invest in goes up in value, which we call the long side of the market. And that's typically how people invest. They buy something with the hope that it goes up in value. And the other side of the market's the short side, which is playing it if it's going down. And that's where most people really are missing out because they don't know how to do that. And that's really, right now, that's one of the most important things to learn. The two most important things to learn: how to participate in a down market and how to protect what you have. And most people don't know how to do either one. But we cover that in these classes.
The key word that you said there is most people hope in this particular example that it goes up. So we're going to talk about how to strategize and how to have your protection in place, but also your targets in place. So now it's no longer a hope or a gamble.
Right.
Now this is a strategy. Now you have an entry point, an exit point, and you just let it work for you. So at that time, this stock was trading right around $2 or $212 per share. There was a potential opportunity around the 207, 205 dollar mark, depending on what chart that you look at. And they had an entry point, a stop loss, which is your protection. So if you're wrong, it's a very, very small loss. And when you're right, they had two targets here.
Right.
One around 211, 217, and based off of the OTA pick here, and they analyze this in live time as well. So that way, if you're one of those people that wants to know how this trade was put on here, or why this might be an opportunity, you can actually read it. This is why it's an opportunity. Long because of these reasons, and we're taking the targets because of these reasons, and protection here at these reasons as well. So now this is a strategy, not a hope. This particular one, I think it was like a couple bucks per share on the targets. Looks like actually $10 per share on the targets, and then $20 per share roughly on targets. So it was a great opportunity for our students. But the key takeaway is an opportunity where you can see it, because that's how you learn. Al, why do you think it's so important to be visually taught how to trade and invest?
Well, I think that's how most people learn. I mean, people talk to you. If they say something to you, it's pretty hard to get an image in your mind of what they're talking about, to actually see it. And by the way, these OTA picks, those are our ideas that our instructors put together in the morning before the market's open for all of the different assets, for stock, for options, futures, Forex. And when you're talking about, I think you mentioned a demand zone where the buyers are, a supply zone where the sellers are. How do we know that? Well, the great thing for us is that the people that have the expertise, the high speed equipment, the training, and the money billions or trillions of dollars to invest, they're showing us on a price chart what they're doing and what they're
Hmm.
going to do in the future. So when we look at a demand zone, like for that trade for Lowe's, a demand zone is where we know with a high degree of accuracy that there are a bunch of buy orders in that zone that will become active as soon as the price comes down and hits the zone. So
Hmm.
basically, what we're doing is we're putting together an idea based on what the institutions are showing us that they're going to do, and then we wait for price to come down to that point. That point will then give you the lowest risk, highest opportunity position with the highest profit potential. And two of the things that most people miss out on is not knowing how to identify when to get out of a trade, either if they're wrong or if they're right.
Yep.
But one of the things that when you look at those picks, and one of the things that you didn't mention was balance sheets, looking at fundamentals, looking at, what does the balance sheet look like? What's their debt to cash? What's their PE ratio, their
Yeah.
forward PE ratio?
How come
Those
I didn't say it? How come I didn't mention that?
because that's not what we're looking for. That's not what moves these stocks on a short-term basis. So if you're looking for something that you want to trade, if you're looking for additional income, you can't wait 10 or 20 or 30 years to get something from that long-term buy and hold strategy
Hmm.
to cover what you need that money for now. So if you're looking for something that's short-term, then the fundamentals are really of very little value. But what is of value, what has always worked, is working now and always will work, is that relationship between buyers and sellers, and that's impacted by these big institutions. So, in
Yep.
other words, they're showing us on a price chart. We show you how to read that price chart and identify what they're telling us. When's the right time to buy? What's the right price to get in? And then where's your target? How do you get a profit? How do you protect the profit? And what if you're wrong? How do you protect yourself if you're wrong? Those are all things that we really go into detail on in the classes that you're talking about today.
Yeah, that's. I'm glad you brought that up because I think a lot of people are still hoping their investments and trade work well, and the relationship between buyers and sellers is supply and demand. Some of these terms we
Yep.
identify and we talk about in these investing classes when you come to them. By the way, you can just text investing to the number 210 for 2 seats for an investing class here. But we kind of define what supply and demand is, and that's that core strategy. So you were mentioning, as Al was talking, he was mentioning the institutions are kind of showing their hand. And when big money is moving the markets, our core strategy here out on Online Trading Academy is designed to identify that.
Right.
How to identify that and how to find that on a price chart, which is actual facts. As Al was talking about earnings and PE ratios and all that, excuse my French, but garbage that you see out there, it creates opinions and that doesn't move the price on a short term basis. So if you're that person that needs an income strategy, you need to understand how the markets actually work. And that's why we do these investing classes here that you can come into by texting the word investing to 210. But Al, we have a lot of listeners that want to, we get a lot of feedback on this price
Right.
analysis that we've been doing. So we just talked about a long position there. And I mentioned it when I kicked off the show, we're going to talk about a short position, which means profiting in down markets. So there was another stock that we wanted that we were asked to look at, and it's the LHX. It's L3 Harris Technologies. I mean, who even
Hmm.
knows what this stock is, right? And
Correct.
who cares, right?
That's correct.
Who a stock is a stock, and a price chart. You can look at any price chart, and you won't even it doesn't matter what stock it
Yeah.
is.
You should just be able to look at a price chart and know if there is a good trade or a good investment without even knowing what the company is, or even if it's a stock or maybe an option or a futures contract.
Correct. Yeah. So this particular one had a supply zone, and it was right around the $202 mark, 210 mark area, right around there, and as a potential shorting opportunity. Now,
Mhm.
just to explain this to our listeners, Al, and just keep it real high level, because a lot of our listeners probably don't really understand how do you profit in down markets. So, just in a nutshell, give an example of why this is an opportunity to profit as it goes down.
Yeah. Well, first of all, in the classes, we talk about at least three different ways of benefiting in a down market. And most people are not familiar with any of them. But one is called shorting. It's actually selling something and then buying it back at a lower price. You're borrowing it, selling it high, and you buy it back at a lower price, and you keep the difference. There are options positions that will benefit if the market goes down or an asset goes down. And there's what we call inverse ETFs, an exchange traded fund ETF. typically mimic something like it could be the S&P 500, but there are inverse ETFs that go the opposite direction. So what you're doing is you're looking at something that with a high degree of possibility is going to go down in value, and you want to benefit from that movement down. And when you think about it, if you're just on the long side, again, which is what Wall Street pretty much emphasizes, it's just buying and then hoping that the price goes up. If you're doing that, you may be missing out on, maybe 40, 50% of the opportunities in
Yeah,
your
big
lifetime to
opportunities.
take advantage of these markets. And I'll tell you, I can guarantee you that guys like Warren Buffett and the hedge fund managers, all of the big institutions, they know how not just to play the long side, but they are also benefiting significantly in the downside. May of 2018, the Dow was down 1,000 points one day. Goldman Sachs made $200 million that one day.
Hmm.
And that means that they were obviously participating or benefiting from a downward movement in the market.
And that is why Al was talking about earlier, why we want to follow the institutions. If Goldman Sachs is doing this, we need to identify where they are trading and investing as well.
Sure.
We
Yep.
can't, it's just like that old saying, if you can't beat them, join them. We're
Hmm.
never going to beat the institutions as a retail trader or investor. It takes billions and billions with a B dollars to move the markets. We let them do the work.
Sure.
Let them move the market, and we can be in there kind of like a mouse. And you have a mouse in there just taking pieces of the cheese. You got this big whole wheel of cheese, and you
Hmm.
have a mouse just taking a piece at a time, a piece at a time, and that wheel of cheese is rolling down the hill. And if you're able to take a little bite here, a little bite there, let the cheese do its work.
Yeah, and one of the great things about the strategy that we have is that there is a huge disadvantage that these big institutions have when they are getting into a position or out of a position. It's something that we take advantage of, and it's something that it happens on a regular basis. It's repeatable, it's reliable, and that's how our strategy works. It actually is taking advantage of a disadvantage that the big firms have, and we'll talk about that in these classes. But it's
It,
really important that you understand that.
yeah, you mentioned a couple things there. One of them being repeatable. In learning a skill, whatever that may be, riding a bike or um, skiing, or
Hmm.
maybe it's playing basketball or football. It's repetition.
Sure.
It comes down to repetition and practice. And I think a lot of people have forgot about that. And there's so much garbage out there on the University of YouTube, and they say, "Oh, it's make $1 billion by doing this," and everybody said, "Oh yeah, I'm going to go do that because it's easy."
Hmm.
Well, we all know that's not possible. If you're going to make $1 billion in the market, it would take several billions of dollars to even have the opportunity to do that. So, where am I getting at with this? In trading and investing, and what we do here at Online Trade Academy is we guide our students through a repeatable strategy. It's a repeatable strategy, almost like a if then this. And if you follow that strategy, your odds and probabilities are much higher to make this work in the financial markets. Whether it's trading for an income strategy, is what a lot of people are looking to do.
Hmm.
Same thing in your retirement accounts. You have to repeat that strategy, and that's how you get better. You can analyze, okay, and that's what we have specialists here to
Yeah.
do to help people. Say you're getting an X amount return and you need more, whatever that may be.
Yeah.
Okay, what do you need to do differently? What do we need to enhance or change a little bit?
Yeah, and I think that one of the key words that you mentioned there is guide. We guide our students through that repeatable process because you can repeat things that are wrong and you develop a habit that's wrong that's not going to
Yeah.
help you. So you have when you're learning a strategy, when you're learning to do anything, the best way to do it, the easiest and quickest way is by just siphoning off information from somebody who's done it successfully. And that's what we do. We provide those people for our students, people that do this on a regular basis and have actually proven to us that they're successful. Let them guide you through the process. When you're repeating things, repeat something that works so you're consistent in what you do.
Yeah, and the key there is also you still got to make your own decisions. I mean, we can give you all the education in the world and all the people in the world. You still have to make your own decision. And that's the great thing about the markets.
Yeah.
It's up to you. You don't have to rely on somebody else to make your own decision because you click that button. So every risk that you put in the market, keep that small, and that's what we train you how to do. Keep that risk small, the rewards higher, and it doesn't matter what people at Online Trading Academy do. It doesn't matter because we'll train you the right strategy, if you follow that strategy, you just increase your odds and probabilities. And that's what this game is all about. If you want to learn more about that, come to one of these investing classes by texting the word investing to the number 210 for 2 seats. Coming up next, we're going to talk about some retirement strategies. This is Josh and Al, investing and trading live. We'll be right back.